Well, let's jump right into platinum miner Lonmin, which was under heavy scrutiny in August last year due to labour and police shootings at its Marikana mine. We know the story well. Lonmin's head office is in London, and its Swiss-based Xstrata owns 25% of the company's issued shares. On Tuesday this week, miners at Marikana once again laid down their tools, and Lonmin has a market cap of 25.6 billion rand. It's currently not profitable or paying any dividends. And looking at that share price, no wonder the value managers are saying that it could be a screaming buy, Paul.
Yeah, that's the 5-year chart, and that is interesting because a lot of people currently are focusing on the 5-week chart because it suits them better to do so, and that's because it really bottomed out at about 30 rand a share. It had that massive rights issue because you'll remember it breached its kind of debt covenants, so it needed to go back to its shareholders. And for a while it looked like Xstrata was not going to follow their rights. They wanted the management team kicked out, and then they said, no, look, we will follow our rights. So it's stabilized, it's bounced back, because as I keep saying, the current outlook is dismal and terrible. None of them have made any profits in the last 6 months because they were hardly producing, because everybody was running around on the surface. But the question is, you know, what is a normalized production level at current commodity prices? And people are sort of more or less slightly more optimistic, but it has settled back a little bit. It's currently trading around $40 or 45 or something.
Let's go back to the big caveat that you pointed out, Rob, is that could they be in for more trouble and hence further downside on their share prices?
I think it's looking like it's a fight between the two unions more than just what wages the employees are getting at the moment. So, you know, a new union coming in, and, you know, they have to manage that well, and we have to follow the laws well. So, you know, you can't just muscle in and be overly aggressive to try get in. So, you know, it's going to be how much the government controls what these unions are allowed to do, and it's a fight between the two unions more than just the companies themselves.
But ultimately, platinum is a cyclical sector. When we see global demand coming on full steam again, we're going to see demand for platinum increasing.
Well,
we're going to see supply-side constraints. I've still got to finish the economic story for you. And ultimately, we're going to see these shares recover.
Yeah, look, I think vehicle kilometers driven in America have tailed off. That tells you that there is a point at which in developed societies, car driving starts to moderate. But admittedly, they're still going to sell a lot of cars in China.
Well, are we going back to bicycles? Are we going back to bicycles?
No, we're going to the bus now, or the subway, it seems. But in China, I mean, they're still going to sell lots of cars, and everyone's got an environmental problem. So I think you're right about the demand for the metal. But the problem is these are companies which are just in total disarray. I mean, what Rob's alluding to, this labor thing, basically National Union mine workers, the companies liked because they were radical, but they kind of knew what they were doing and the negotiations would proceed. These AMCU people are crazy. If you've listened to Joseph Matunjwa, they are the kind of populist union which just kind of creates hell because they don't want to say anything that'll displease their members. So it's really, really difficult right now for any production to be obtained.
Dangerous to call anybody crazy on live television. Expect some feedback or some lashback.
You should invite him to come on to one of your shows and you can experience it firsthand.
We'll put you with him, Paul. I think that's a better idea. So, Rob, Lonmin at current levels, you still concerned? Do you stay away?
I think there's other options. I'd stay away at the moment. They've got a lot of they've lots of problems in management as well. As Paul was saying, you know, they were going to get rid of management. Now they're not getting rid of management. So I'd rather wait. I'd rather look at one of the other miners.
I mean,
is there anything redeeming on the Lonmin story?
Well, I mean, the other thing about Lonmin was the management team always sat in London, which was fabulous for them. I suppose they had nice offices there. But then Ian Farmer got sick and basically resigned from the company. Simon Scott, the CEO, looked as though he was, you know, had to go to Khaliq's to buy a suit in order to kind of step into the job. But to be fair to him, he's now doing all right on the job, and it's all kind of more or less there or thereabouts. Yeah, I don't know. The only thing you can say about these guys is that, like the platinum is still under the ground. It's valuable. It's worth $1,600 an ounce, and it's right there at the end of the shop.
South Africa produces 80% or so of the world's platinum.
Yes. So the company can be valued not by reference to its potential earnings, but by reference to the millions of ounces under the ground.
The Xstrata holding in Lonmin, your thoughts around that?
I think in this market they're going to stay there. There's no really exit policy for them. They've got no way to get out of it. So I think they'll stay. Maybe they'll look to exit if the market recovers slightly. They'll try to withdraw.
Hot or not, Paul?
Well, I suppose they
Lonmin.
could also buy it out in its entirety, but as you know, Ivan Glassenberg, who now owns the total sort of Glen Strata combined, Glen Core Extrata put together, he doesn't like building new stuff. He thinks CapEx is idiotic and that you should just like not produce until the price suits you. So, I mean,
hot or not on Lonmin?
you know, I'm not all that hot on this whole sector, so I'm going to go with not hot on this one too.
Not hot on this one.
Not hot.